What's currently your investment thesis?
My investment thesis is, do I like you? It comes down to that when you really look at things, because the first person I back is the founder. And the key question I ask myself is, what risk have you taken on yourself before you ask me to take a risk on you?
How do I get my idea funded?
For me, I'm looking at founders who have bet on themselves already. I look at markets also. I think there are certain companies that have to exist in every ecosystem. So if you think about your business, what you need to think about it is, does this company need to exist?
Can't we build a global product from Africa?
What I find very, very interesting, especially in African markets for me, is solving for non-consumption. Your biggest opportunity is not necessarily in the existing market, is what you are going to create. How is your product creating a new segment of people in a developing nation and solving for non-consumption?
What exactly are you finding out as a VC?
The key test for me is, as a founder,
I'll set perspective, first of all, to this particular fireside chat. And last year, December, I was trying to make a decision about my life. And then I came across this book by Mr. Olumide Soyombo. And it's called Vantage, My Life, Starting Out and Startups. And I read the book like in a week. Actually, how I discovered the book was I came across a Twitter post where you were talking about business partnership. And I felt like I've never heard it so well defined, you know, with a very non-academic perspective. And it actually began my foray into the book. I've always known your journey. And when I heard that you wrote a book, I felt like, okay, you know what, I need to get this book. But and if you really want to get the book is outside. So free promotion for Roving Heights. I think they have a stand outside with lots of copies. I recommend that you get it. You'll learn a lot. But my first question to you, when I began reading this book, and I knew I was going to do this fireside chat, the first question I was going to ask you was, how is your dad doing? And is he still sending you emails?
Thank you, and good afternoon now. So good afternoon, everyone. I think I speak with my dad maybe 5 times a week, so almost once every day. He's retired, but he's not tired. I think he's, once you've been an entrepreneur, you have this bias for action, right? So he's sitting on boards, but he's still looking for activities to do. So sometimes I throw problems his ways just to keep him busy, even when I have the solution. So yeah, he's doing very well.
He's doing very well. Oh, so good to hear about that. And for some of you here that might not know, Mr. Olumide, when I was inviting you here, I told E that Olumide has agreed to come. I was so excited. He was like, that is the biggest man in tech that should hold you. He now said, PiggyVest, Paystack. He was just mentioning all the startups. It's not valuation money, it's real money. So I'll hold you after here. But I think based on the quality of the audience, I will be asking questions based off the book and based off your own experience, right? So do you think we are lacking in quality of startups? And what do you think we are missing currently in the ecosystem?
Okay, good question. I think there's a tendency for us to do that comparison and contrast, right, with other ecosystems without acknowledging the journey we've been through and the journey we're actually going through. Some of the interesting things that started to happen in our ecosystem started just about 10 years ago. I remember when I started out LeadPath, which was an accelerator that we formed in 2014. Then it was $25,000, $50,000 for 15 to 20% of a company. And we'll put them in front of investors in a demo day after 3 months. And there was nobody to fund them as a follow-on. So you have to write another check. Today, up to the point where we got to 2020, 2021, where companies were raising 500K over WhatsApp. Hotels.ng's Series A round in 2015, 2016 was $1.6 million or $1.2 million. Today, people are raising pre-seed rounds of $1 million. So I think we've come through a journey, and we should also understand that it's still very, very early days, despite how we want to qualify the age of our ecosystem. We are getting to a point where there are so many roles that never existed 15 years ago. 15 years ago, you wouldn't hear people say, oh, I'm a digital marketer, or I want to be a product manager. So new roles are being created. Those same people will go ahead to form companies. So I think at the base of what we are building has to be scaling up talent, right? Scaling up entrepreneurs, scaling up talent, because businesses will not exist in a vacuum, right? People create businesses. And so the more our ecosystem grows, so for example, I invested in a company called Mono. The Mono founders worked at Paystack before, right? Paystack also got formed 7 years ago, and that came from those guys working in the bank and building up their own platforms before. So I think it's a journey. What you're going to see is some founder from Mono would exit, build a company, and that's how ecosystems are built.
So, I mean, you said something quite interesting, because obviously you're saying the traditional banks birthed the Paystacks are now birthing the Monos, and hopefully I'm hoping Monos will also birth more entrepreneurs. What's currently, I mean, most people in this room, once they hear that you're a VC, the next question that will come to your mind is that, how do I get my idea funded? What's currently your investment thesis, and what are you looking for right now in the market?
I think my investment thesis is, do I like you?
Really?
Yeah. So do I like you, Elijah? I'm not sure.
But I crack good jokes.
I think it comes down to that when you really look at things, because the first person I back is the founder, right? You can talk about, yes, the market size, the product, and so on, but it all starts for me with the founder. And the key question I ask myself is, why should I back you, right? What skill sets do you have? What domain expertise have you built? What's your different view, your worldview of the specific problem you are trying to solve? What risk have you taken on yourself before you ask me to take a risk on you, right? So you can't say you are raising $1 million and I should invest in $1 million, but that you resign from GTB when you have raised the money.
Raised the money already.
Take a risk, right, and show me that you really want it. And that way you have shown some sacrifice, right? I think if you look in the journey, if you look at the dictionary, beside entrepreneur, what you should see is sacrifice. So for me, I'm looking at founders who are willing to who have bet on themselves already. And when I talk about investing and founder-investor relationships, founders should not see it as a favor. I'm not investing in you as a favor, right? It's exchange of value. But then there's this tendency where people are looking for funding and then they feel like they're going cap in hand begging, right? No, it's an exchange of value. You have given up equity in your business, which is the most prized asset, for exchange of value, because you think you're building something very big. So for me, it all starts with the founder. Yes, I look at markets also. I think that there are certain companies that have to exist in every ecosystem. So if you think about your business, right, what you need to think about it is, does this company need to exist, right? So if I think about the Paystack example, and that's a popular example, so I'll probably use it a lot. Before Paystack, who here had developed a website in 2014, before 2014, developed a website?
Okay, I see some hands in the audience.
Some hands, right? In 2014, 2015, before Paystack, to develop a website to collect payments online, you would need to pay, I think, 150,000 naira.
Yes.
To interswitch for WebPay and go through an integration point of 2 weeks, 3 weeks before you get up and running. So in the last 10 years, and you can see that 90% of the room never experienced that, because a company was created. Now with a few lines of code, you can start receiving payments online. But if you had told someone 12 years ago that that was possible, they would say, really? So if you think about it, it comes to, does the company need to exist? And is there a right founder to problem match? I look at markets like Latin America, Southeast Asia, and you can draw parallels between certain companies in those markets and certain companies in our developing market. I was talking to one of the founder of QED. QED is one of the biggest fintech. I think they've backed New Bank, Klarna. probably a couple of $1 billion asset under management. And we had a dinner in Lagos. And he said something so profound. And he said, when he's looking at companies in the West, in the US markets and the European markets, and founders are pitching to him, sometimes he's thinking to himself, right, that is this a real problem, right? Do people care about shampoo for their dogs, right? But that when he came to Nigeria, the problems he saw and the problems he met and problems he encountered with people were real problems that were part people. You could see the problems, maybe you learn Muritala Mohammed, right? Problems in healthcare, problems in logistics. There are problems all around. So I'm not really particular about a specific area because I think there are opportunities in every facet and every mode of the industry we can think of. We just need to find bold entrepreneurs that decide to tackle those problems. So I think for me, it's where the entrepreneurs focus on and the super founders focus on that I back.
I mean, through the years, I mean, you've seen the evolution of founders, right? Founders, you spoke about people thinking venture investment is some form of favor. And I've been seeing a lot of bad habits in the news recently, right? I mean, like, well, not recently, it's been happening for years so far. What are some things that you can tell a founder in this room and from your experience, I mean, maybe you telling us from a story, because I mean, in the book, you really shared it all. You give receipts, emails. I mean, this book had emails that he sent to the founders of PiggyVest, telling them why did they pay themselves salary and they should refund the money back. And funny enough, though, I mean, don't laugh because actually his dad actually did him the same thing. So I think he was just taking the
passing it on.
He was just passing it up, right? But what are some of the things that you are seeing that makes you concerned regarding founders' behaviors? Because some people are saying VCs are becoming like nannies to the founders who are just making a mess everywhere.
I think there's enough blame to go around, not just on the founders, right? People need to respect capital, right? If you don't want to be accountable to anyone, then don't take anyone's money, right? I think the biggest duty of care to an entrepreneur is respect for capital, right? I was talking to a founder once who decided to build, he was doing some remote freelancing. He was earning about $5,000, $6,000 a month. So he was doing very well, super technical founder. And he decided to build this SaaS core banking platform. And he raised about 600 or 700K US. And he started going into the market and selling and was already having monthly recurring revenue. And he asked me a question. He said, "Sir, please, how much do you think I should pay myself?" And I looked at the business and I saw that, the business was already was already cash flow positive. And I figured, oh, you can afford to pay yourself $3,000, $4,000 a month. So it was even a step from where he was earning before. And he said, "Sir, I can't pay myself that. So if I pay myself that, I might run out of runway." So there was a sense of care and a sense of sacrifice. I'm not saying founders shouldn't pay themselves and be comfortable. But I think the key test for me, right, is as a founder who has raised money and taken money from other people, when you're about to do something, there's some voice that is telling you that it's wrong. That voice, if it tells you it's wrong, most likely it's wrong. When you want to buy that business class ticket for 10 million naira, there's one voice that is telling you that this thing you're doing is not correct, but you're not listening to that voice.
Very true.
So I think it's that sacrifice. But what has happened over the years, right, especially in the zero interest rate environment, we found that there was a lot of capital just chasing fewer solid entrepreneurs. So you saw VCs competing to get into deals, and then they'll throw money with little or no DD, right? And so some bad actors then got funded. Some people who were not ready then got funded. So that's why I said there's some blame to go around on the VC side. On the entrepreneur side, I think people, and I call out a founder in my book.
Yeah, Glue.
Yeah, because how can you raise money, no product, and between the founders, you guys were earning about 10 to 15 million naira a month, no product, nothing.
Wow.
Right? So I'm paying you to build your dream. So where's the sacrifice you're making? Or how do you justify a founder saying he's going to Ghana for 3 months for market research, staying in Kempinski Hotel, chilling with buddies, chilling with buddies with investors' money.
I want to go to Kempinski.
I can do that, so I like to go to those same places. But it's sacrifice, right? But it's under the guise of market research. That person is not building for the long term. So I think if you are building for the long term, you would understand what sacrifice means. And like I said, entrepreneurship and sacrifice go hand in hand because you are building for the long term. So the key item for me around the founder behavior has to come from respect for capital, respect for yourself, right? Because the reason why I called out the founder in my book was because I realized that he was going about to go and raise again. And I'm like, not on my watch. You have misled a couple of investors. I won't let you mislead others. And we should call out bad behavior on both sides, right? Even on the investor side, there's bad behavior.
Really?
There are investors who you have invested in a company and you have taken 50, 60% of the company, right? That's bad behavior, right? And those kind of investors should be called out, and so that founders don't get themselves in bed with those kind of people.
So I think something that comes to my mind about sacrifice, right? I mean, sacrifice is a price to pay, typically, for any entrepreneur. So, but what's your advice on handling the pain and anxiety that comes with building an enterprise?
Don't do it.
Don't do it?
Don't do it. I mean, entrepreneurship is we beautify it and we glamorize it in this parts, right? But, and it's well-deserved for the people who make it out. But it's a lonely journey, right? And it's why I even write also in the book that co-founding a startup is like getting married, because sometimes you need a journey partner in building. Entrepreneurship is lonely, is hard, is brutal, but the rewards could be interesting. So for me, I think find a co-founder as much as you can. I like backing teams than solo founders.
Why?
The Bible also said in our 2 which is 10,000, 2 which is 10,000.
Yes.
Because they bring a multitude of skills or a multiplicity of skills into the company, right? I use my example. My co-founder in Bluechip Technologies, Kazim, is a highly technical guy, first class graduate in computer science from UI, had solid technical experience. I did, but I understood my key strengths would now remain in business development, marketing, and strategy, while he handled other things. So he also didn't have those skill sets. So if you had backed a company like us, you would then see that there was a multiplicity of skill set and a complementary skill set on both sides that worked.
So, I mean, so that the founders don't leave with like us speaking over their heads, right? One of the questions I wrote here to come ask you was, how do you assess the quality of a market and the quality? I mean, you've spoken about the quality of a product, which is the fact that the product, does it need to exist, right? But how do you assess the quality of a market? Like when someone says, because sometimes people are building products that don't have, like they are going to create a market. Do you believe we should be building to create a market, or should we rather build for an existing market? And how do you navigate that? Because sometimes some products might not have immediate adopters, but by just existing over time, they will snowball into something else.
Yeah, I have this saying, and I think I tweeted it once, and it was a version of, or Mike coined that version because I'd seen it in several places before, in fairness. And it's that because there's a gap in the market, right, doesn't mean there's a market in that gap. Right?
I see that a lot.
Because there is a gap in the market doesn't mean you have to solve the problem. I remember when you would see examples of people saying, I know entrepreneurs, right? You have to be an optimist before you can be an entrepreneur, don't you? And you're like, okay. They say Nigerians, every man wears a singlet, right? If there are 1 billion, if there are 200 million men, maybe 10% wear a singlet, that's 10 million. If I can sell to 10% of that 10 million, and I can sell at 500 naira to each of those people, and all of a sudden your Excel is looking very good. And I tell people that the biggest work of fiction is in Excel sheets.
Yes.
Because nothing there will ever happen. You will have all the growth year on year on year. I always tell the example of I don't know how many people have been in Lagos recently. I mean, I guess a couple of people. But before the new airport that was open became open, I don't know if you guys remember, the airport was locked. The new airport was built, ready to launch, and it was locked for I think a year.
Yeah.
Because some bigger planes couldn't turn. And I was taking a walk through the airport when it was still empty, and I'd seen a restaurant that had opened. And I can imagine that founder had said, hey, this airport has 500,000 people in a year. If I can just get a market. And for 1 year, the airport was closed. Capital sunk in, nothing. People hired. And nothing happened. So you have many things that you plan for that do not then come to pass. So for me, when I'm thinking about markets, right, I'm thinking about boom market slide for me is one of the bullshit slides I pass over when I'm looking at pitch decks, right? Because you find out that most times you don't know, right? And the only way to know is to do most times. And what I find very, very interesting especially in African markets for me, is solving for non-consumption. Your biggest opportunity is not necessarily in the existing market, is what you're going to create. So that's why one of the books I recommend is Prosperity Paradox, right? Because it talks about market creating innovation. I gave the Paystack example, how it democratized access to payments for people that typically would not be able to have paid 150 or 200,000 to get it. So how is your product creating a new segment of people in a developing nation and solving for non-consumption? How do I make sure that I can build a community, right? Another example is Moniepoint with the agency banking network, and being able to build and create wealth for people and form a community. I have another company that we back called Money Africa that is doing social financial community trust, right? So it's giving out loans, but for you to get a loan, somebody has to refer you. And if you default, it affects everybody. So the guy's holding you and saying, hey, oh boy, don't default there. And those were people that were uncatered to before. So I think in looking at markets, you need to think about market creating innovation in terms of what you build and how to solve for non-consumption. I think those are the big opportunities in the African market today.
So I'll be going through some quotes that you wrote in your book, and I would like you to speak to them as it pertains to opportunity.
Sure.
So Christopher McDougall, I like this quote very well. It said, "You have to give your heart to the goddess of wisdom. Give her all your love and attention, and the goddess of wealth will become jealous and follow you." Then a Hindu proverb you now put under it. He said, "When the goddess of wealth comes to give you her blessings, you shouldn't leave the room to wash your face." That was very funny to me when I read it.
Yeah, so I was speaking on an opportunity I had when I started Bluechip in 2008. We achieved some level of success. So by 2014, we're probably doing close to about $5 million in revenue. And I started thinking about building out a new venture that was B2C-like and that I could invest in other companies. And that was where LeadPath was born. So I shared the idea of LeadPath with a close mentor network, which obviously includes my dad and some of his high net worth individual friends. One of them was a gentleman called Dilip Shah, who is a British billionaire. And the interesting part was he had seen what I'd built with Bluechip. So like they say, success begets success, right? He had seen what I'd built with Bluechip. So immediately I sent him the LeadPath play, or what I was trying to do. Remember, I was not even looking for money. I just wanted to share with them, hey, this is the new thing I'm building. I would like to understand how you guys invest in traditional businesses. Maybe I can take some of those lessons and bring into the venture capital play. And immediately he had seen some of those plays in England before. Immediately he saw that. He said, hey, Olumide, I'm giving you $1 million.
Really?
For this venture. Obviously, because like I said, he had seen what I'd done before. He had seen the similar play. He understood the opportunity immediately. But I was not looking for
money.
And so I told him that, hi, uncle, I'm not really looking for money now. I'm just taking out your advice and so on. And then he then responded to say, when the goddess of wealth comes to anoint you, you do not say you are getting ready for the occasion. You accept immediately because you don't know if that opportunity would come again. So that's how I accepted $1 million.
All right. I mean, that's a very interesting story. I mean, I'll move further also. I mean, because I run a business and everything I do actually is based on partnership. I never do anything alone. And that's something I saw stick out in your story also. Also being an entrepreneur and being a VC. So I'll read something you wrote here. So we're going to talk about partnership, right? And I think we have a very young audience. And the whole idea is I also started my business about 10 years ago. And when I started 10 years ago, I started with friends from school. So I feel like I was actually around the same, making friends like this. So I'm just going to talk about partnership. So you said, you quoted Warren Buffett, and you said, partnership is not a legal contract between two equal individuals. It's an emotional alliance between two people who are committed to each other's success.
Correct.
Then you now went, it is business and it is personal. Can you speak to business partnership and how it serves as an ingredient for success?
Sure. I think the Warren Buffett quote is very interesting one, because I mean you have partnership agreements most times in many relationships. But the day we open that partnership agreement to say refer to clause 5.2, then there's a problem, right? If we think we have to go back to that agreement at any time. Sometimes it might be useful to, but what would make you go back to that agreement and start quoting verses like you're quoting the Bible? It shows some sign of cracking and some things that you need to fix. I talked about how co-founding a startup is like getting married, right? And I used my example with Kazim, my partner in Bluechip. So we had met on a project in 2007. So Bluechip started out in 2008. We met on a project in 2007 and we worked together for 1 year, right? So throughout that 1 year, I saw his work ethic, he saw mine. We built a relationship, right? So sometimes you're not going to come to TMCon and meet the person next to you and say, hey, let's start a business together because the person said he's a developer. You need to build a relationship. I mean, some people have done that and it not ended up well, right? Yeah. So you need to build a relationship. The same way you don't meet a woman in TMCon and decide to marry her. Hopefully, I hope you don't.
Hopefully.
But that's really where it starts from, because you need to build a relationship. So imagine the relationship Kazim and I built over a 1 year period. What if I had borrowed money from him and didn't pay back, right? What if I had seen his approach to work was lazy? And what if he had seen that the same for me? Throughout that 1 year, we got to see what each person stood for.
So it's kind of like you guys were dating.
It's really like dating, right? Because once you build a partnership, right, it then becomes about trust. It then becomes about managing money. It then becomes about managing the influence from outsiders. You would have people in telling you about your partnership who are shareholders in your business, but they don't have any share on your cap table. Yeah. But they have advice, a lot of advice, right? So till today, Kazim and I take the same money. Our wives drive the same cars. We drive the same cars. Wow. Because it's a bond that we are in this together, right? We are building together. We live here and we die together, right? In the sense that we die here. We're on this journey. And when you understand partnership in that light, there'll be disagreements about, oh, this is how I think we should do this, and this is how I should think we should do that. But the overall vision is clear to both of you. Some methods and approach might differ, but the overall vision is clear and two of you are committed to that vision. So for me, it's choosing a co-founder. It's a dating process. It's understanding what skill sets that person brings. It's also understanding how not to overvalue your own input. It's one of the reasons I've seen many co-founders.
That's something I saw you mention in the book, and I was going to touch on it. Yes.
It's one of the main reasons I think partnerships don't really work or not really worked well in some instances. And one of the reasons why many partnerships have failed, because some guy is thinking to himself, I'm the one bringing all the money now. I've brought all the last 4 clients. And then there's one thing in his head saying, if this money was only my own, this is how much I would have made. Forgetting that this thing is a marathon, right? In the next 1, 2 months or 3 months, that other guy's opportunity might or deals that he's working on might then materialize, and you then suffer a dull period. So for me, it's don't sweat it as long as you see the person is putting the effort, because the tide will change in the long marathon that entrepreneurship is.
Wow. So the last question I'll bring up before I open it up for questions will be, how do you think Africans, because one of the key things we're talking about here was the next wave. And so I'll tie two questions in one.
Sure.
So there's this whole drive towards AI and us being at the forefront of AI and us building AI products, But also on my own side, I think I was watching, there was this documentary they did called The Playlist on Netflix about how they built Spotify. And I found out, that's how I knew Spotify was not a US-based company. It was a Swedish-based company. And the guy asked a question in the film. He met a guy after building his first product. He was like, hey, why must we can't we build a global product from Sweden? And that question has kept haunting me because I'm like, can't we build a global product from Africa? Not necessarily Nigeria, but from Africa. And what is stopping us from being able to do that? Does AI present to us that opportunity? Or are we just thinking above our heads? Or is it that we've not even solved our local problems? What exactly are you finding out as a VC?
An interesting question. I think I sat down in the last panel and I saw Francis did speak about something I'm very passionate about, and I think is the real huge opportunity for us, which is building that AI workforce, right? For the world. And I'll put it in perspective for you. There have been some key revolutionary technologies, right? One of them like being the internet. I was lucky that I used the internet for the first time when I was 12 or 13. But the average bank MD today probably didn't use the internet till he was 35 or 36. And meanwhile, his counterparts in the West obviously used the internet many years before. A revolutionary technology, but it got to Africa later. Same with mobile, right? Revolutionary technology, but it got to Africa later. With AI, we have a huge opportunity, and it's one of the first times with a revolutionary technology that a guy in Guzape and a guy in the Valley are both learning about the same things at the same time and have opportunities to learn and build at the same time. It's profound because the guy in Guzape's cost is 10 times cheaper. In 2050, Nigeria will be about 400 million people with a median age of 20, right? So those guys will be digital first. Those guys would need skills, and we can then be the workforce generation for an aging West, and AI presents a huge opportunity for us to build people in that line. So for me, it's how do you skill our people up? I think that's the huge opportunity, and that's the next thing I'm backing. Skill our people up to be able to take advantage of the opportunity that presents itself. Because what does it do for us? We're already seeing some snippets of it, right? You are seeing some instances of Nigerians working here, earning USD here, living in Nigeria. But how do we scale? How do we scale that? I tell the story in the book about a waiter called Daniel that I met in an Ikoyi restaurant. And I'd asked him if he had used the laptop before, and he said no. I'd used the computer. He said, well, the one in his the POS at the counter. And I asked him if he liked math, and he said yes, math was one of his favorite subjects. He had an HND in civil engineering, I believe, from Yaba Tech. And I said I was going to pay 3 million naira for him at the time to study 1 year in semicolon. Comes with a laptop and a meal a day, but he had to leave the job. So he was earning about 50,000. I said I'll give him a stipend for 30K. And today, after the semicolon program for 1 year, finished the program. Today he's working for a YC-backed company called Money. I spoke about them earlier, and he's earning over 15 times what he was earning as a waiter, right? An opportunity for knowledge that changed someone's life. So how do we scale that to 1 million Daniels, which is what I guess the minister is trying to scale with the 3MTT program. But we need to we can solve the supply problem, but we need to then create the demand for that offtake. And I think that demand would not be local. It would be from Africa to the world, like you mentioned.
Wow. I mean, I think that's really instruction because a round of applause, please, for that. Because I think everyone should take advantage of these opportunities because I think left, right, and center, there are opportunities to learn. So, but we need the young people actually learning and actually paying attention to it. And you've just given me a reason to. I would ask if, I mean, I just remember the question that my colleague Richie told me I must ask you regarding corporate governance for startups. I mean, some people get thrown off because these are young people who are just trying to build something, make sense of it. Maybe they didn't get a job. They're just trying to start something and say, you know what, let me just try and solve a problem. This is a startup craze. So they come together and try to build something. But then they get faced with the fact that, oh, you guys don't have corporate governance. You guys are first time founders. We can't back you, only back second time founders. What exactly should young founders put in place that will make VCs like you trust them in terms of corporate governance, especially now that people don't back first-time founders?
I back first-time founders, and
Really?
I think any good investor that doesn't back first-time founders doesn't know what he's doing. Because for me, like I said, it comes to the entrepreneur, right? If you've built something, you've worked somewhere before, you've seen a problem in the market and you want to go out and solve it, I'll back that founder because I know that you have some domain expertise or you have a unique worldview of this problem. So for me, I think it comes down to the first part of the question that I'd answered, which is the entrepreneur and themselves. The entrepreneur builds the business, right? The entrepreneur and the early set of employees set the culture. And we can have the most interesting things around corporate governance codes, right? So that VC that is saying, I want to see what are your corporate governance codes, what are this and what are that, those things are on paper, right? It's the culture that drives the adoption of those things. And that culture comes from the early employees and the founders and the message the founder passes within the business. So for example, you are the entrepreneur and there are certain bad behaviors you're doing in the business. Who are they going to copy? Everybody is going to copy you, right? And then there are certain good things you do. What are they going to do? Everyone is going to copy you. So I think for me, the real thing I'm trying to understand, especially in the early days, are the entrepreneur's ethics and moral compass, the entrepreneur's value system, because that is more important than remember, I'm always the first check in most companies. That's more important to me than everything that they've put in their corporate governance codes or whatever, because most times is the culture that drives that. I mean, as you grow and as you scale, then you codify many of these things. But anybody that is asking you for a 5-year business plan, when you're an early stage company as a founder, is not really a serious investor, in my opinion.
Wow, thank you so much about that. And a round of applause, please. I think my final question with what books are you currently reading and which one can you read to us? Good.
Okay, what book am I reading now? Chaos Monkeys is about the opportunities for obscene return in Silicon Valley. Who Says Elephants Can Dance? The story of the IBM transformation. And Bad Therapy is about why our children aren't growing up properly or something like that.
Wow. Yeah. Ladies and gentlemen, Mr. Olumide Soyombo. I don't think I still have time to take any question because he needs to run to the airport. Can I see my timer, please? Shoot. Okay, two questions. Any questions from the audience? Who is taking the question? Okay, see somebody. David, do you want to ask a question? Approach the bench. Yeah, I'll give Mr. David. Give him the mic.
Hello, sir. My question is around corporate governance. So I made the very foolish decision to leave paid employment for entrepreneurship, but I'm currently in the process of setting things up. And I've been thinking a lot about the concept of a co-founder, and I don't know if I'm ready to take that dive yet. However, to mitigate for that gap, I'm looking at an advisory board. From your perspective, do you think in the meantime, until I find someone that I'm confident enough in, that I can approach to say, hey, let's do this thing together, is that a good idea, or do I go for a board of directors instead? Or is it even too early to start thinking about all of that?
Okay. Well, first, congratulations on taking that jump. Welcome to the dark side. The Lord be with you. I think, there's a way you can formalize an advisory board, but there's also an informal advisory board that you have, right? So for me, whether formal or informal, is how do I build a network of trusted advisors and a network of deep expertise that I can draw from, right? And that is so formalizing the advisory board gets them committed in a way to helping you. But then if you've not built a relationship with that advisory board, even though you formalize it, the person might not necessarily even have the time to help. So for me, it's to first define the things that you think you need, right? Before you even say, okay, why do you need a board? Why do I need this advisory board? What purpose does the advisory board serve for me? Oh, okay, I'm looking into inroads into the entertainment industry. And so you find Bizo, right? And
Bizo is here.
You find Bizo and you put him on your advisory board. That's value because you know you don't have that. But if I know I have the same network that Bizo has, why do I need to do that? So you need to first define the key things that you are lacking. I think it's a smart decision that you have delayed the choice of finding a co-founder till you are ready. But first define the key expertise that you are lacking, and then find people who you've built a relationship with that have that expertise that can then provide that needed advice. So you don't really need a formal board of directors to do that.
All right. Oh my God. Okay. That was actually a speaker that asked the question, but okay. Anyone from here? Can we get one person here?
We need a woman.
Yes, woman. Yes, there's one in the middle there.
Hello, good afternoon.
Good afternoon.
Really great. I'm really enjoying this conversation. So I've been thinking about so many people building in silos and coming up with let's say half-baked ideas or half-baked implementations. What can we do about, I don't know, fostering collaboration, sharing of ideas? I understand that there's an issue of trust and someone can run away with the idea and all of that. So what can we do? Because it seems like so many people are building, but it's all very small scale. We're not really doing anything, coming together to build something big that will actually have a big impact in solving the numerous problems we have. Everyone is just on their little corner with their little implementation, but not really hitting the problem head on. So we have a little I don't know what you think about that and what the way forward is.
Interesting question. I think, and I always tell people who talk about stealing your idea, right? You can't steal my execution, right? Everybody can, there's always this thing where people think I have this idea and it's only you that has that idea. It's almost like when you just buy a car and all of a sudden you start seeing the car everywhere. When you have that idea, you've come into that moment. People are coming to that moment before you, but then your path for execution will most likely be different. I think I think is the audacity to build, right? And if you have grown up in certain environments, right, and if you look at Western markets, is why you would see a Western founder ready to leave his market and go to another market, right, and build in those other markets. But you don't see many Nigerian founders or African founders doing the same. And it's about examples and what you've seen in that environment. And so the more we create those examples, right? Oh, a $200 million company can be built in our market. A $1 billion company can be built in our market. So I can dream big, right? If you remember, many of our parents had small businesses, right? And those businesses sent us to school and then they've closed it after we went to school, right? They served the purpose. But in other markets, people would not think that way. But today, many entrepreneurs that are building have bigger dreams and bigger aspirations. And you're seeing that in some of the kind of companies that are being built today, right? You have billion-dollar valued companies that are creating value that didn't exist before. So I think it's still very, very early days. Like I said, the nascent ecosystem really started being built were in our markets about 2014, right? 2013. So how do we foster collaboration? Is by creating environments like this. It's just like, how do you get people to collaborate, right? Or how do you, people that create dating matchmakers platforms, they create a platform for people to meet, right? And when people meet, connections would happen naturally. I'm not going to force you and say, hey, you must build with this person, right? It most likely fail. But if we create an environment where there's exchange of value and exchange of ideas, and we do it consistently, those kind of companies will be built, in my view.
Wow. Mr. Olumide, thank you so much for your time. I don't know if we can take any more questions. No, someone is waving his hand like he wants to ask his question by force, but we don't have the time. Thank you so much, Mr. Olumide.
Thank you for having me here.
I think we should take a picture.